Good morning, traders from each and every part of the world that are joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM linking you to the global markets to access various financial assets. Um, Recently, I got an inbox from a good friend of mine who is also part of the HFM family and asked, what are these financial assets you keep talking about? The financial assets vary from stocks. When I speak about stocks, I'm speaking about ownership of the derivative ownership of companies like Microsoft, Meta, Apple, Google, right? You could all access these America stocks using HFM. I'm also speaking commodities. In commodities, I'm speaking about gold, oil, right? Some agricultural products also. I'm also speaking indices or what other traders and investors called futures. This is a basket of stocks. Others would also call them ETFs, exchange traded funds, like US 500, US 100, US 30. All these high valuable assets. I'm speaking about currencies. All these high value assets, we could all access them using HFM. But before we slip right into today's series of the daily morning market call, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video, to mean that you could access this YouTube video at your own free and convenient time by visiting hfm.com. When you visit hfm.com, hfm.com, you could attempt to register for an account, and our experts will get in touch with you to make you familiar with the various opportunities that there are in the financial markets. Also on YouTube, in attempts to satisfy our curiosity, you could visit HFM Kenya YouTube channel by searching HFM Kenya, and you will find content there that is of high value, that is absolutely for free. Kindly remember to like, subscribe, and click on the notification button so that you are not left out in future content that we produce from time to time. Also share so that it can reach more people. This will improve on our algorithms to enable us develop more content on market and HFM family demand. On to the charts. Fundamental analysis. Point number one, always that has been our sequence of doing things. Fundamental analysis, the study of geopolitical and economic news moving the markets. Yesterday, being on the 1st of April 2025, that was April Fools, we had high impact news coming from Australian state, Euro state, and also United States. And in the United States, we had ISM manufacturing PMI, which is purchasing manufacturing index in the manufacturing sector, where we see captains of industries or leaders in the manufacturing sector in the United States give their prospects on certain indicators of the economy in that particular sector. And it came out lower than expected. The expected was 49.5. It came out at 49.0, that is negative 0.5, that is weakening the dollar slightly. We also had euro news coming in, most of them as expected, not giving us market direction. And one, which is the core harmonized index consumer prices year on year, which is an inflation data, came out lower than expected, challenging the strength of the euro as a collective regional medium of exchange or currency. The Australian dollar also had the Reserve Bank of Australia speaking about the condition of the economy in Australia. Now, this affects the Australian dollar, also affects American stocks, also affects some global stocks, which have got the Sydney mark on them. Sydney, the capital city of Australia, in a joint effort in the global markets. Now, the interpretation of this could be mixed reaction, that is from economic data. Today being on Wednesday, we have also high impact news, and the most anticipated one on economic data would be the ADP employment change, which is a labor data telling us the number of people employed possibly in the private sector. We see that the previous one of 77,000 people got a job in the private sector. The anticipated is high, 105K. That is quite high. If the number printed, I believe McLean, I'm answering your question now, how to interpret economic data. If the number printed is higher than 105K, that is good for the dollar. If it is lower, it is bad for the dollar. Now, knowing that you are a JPY trader, you like trading the Japanese yen, if you pair it to the United States dollar, when this data is printed, if it comes out higher than 105, that means stronger for the dollar. So you would possibly consider looking for long positions or buys. If it comes out weaker, you would consider looking for short positions. However, also look at the economic data of the Japanese state to weigh, but pay a little bit much more needed attention to the United States, because we know it is the reserve currency of the world. And off from that, on geopolitical forces, we are having Trump's administration, that's the President Donald Trump, beg your pardon, administration announcing tariffs updates today, being on the 2nd of April 2025. And here are the market expectations. Let's look at it from two sides. One side is what the market is expecting. The second side is what will possibly come out, okay? And depending on the outcome of these two scenarios, we are going to possibly have a much more needed market direction that we have not really been experiencing, especially on stocks, both individual stocks and collective stocks. So on one side, which is what the market is expecting, the market is expecting large, widespread tariffs that are imposed on United States partners, and this widespread has no aspect of targeted tariffs. It is not targeted on specific countries. It is targeted on all trade partners. There are economic pundits on the United States administration who have alluded this is possible, up to 20% tariffs. Tariffs are tax imposed on imports. So, for example, if Canada is importing energy to the United States adds taxes to that import, which is not good for Canada, all right? That is a good example. Now, if this is widespread, this is causing fears and uncertainties, explaining why we have been having a roller coaster on individual stocks and also group of stocks, explaining why the power of the dollar has not really been determined despite much more needed directional economic data. And that is the market expectation as it is right now. However, once the tariffs are announced today, I believe we are going to look at it. On tomorrow's daily morning market call. On the flip side, when the tariffs are not as aggressive as anticipated, this is going to give a little bit of optimism, where we're going to see stocks now giving us a much more direction, much possibly bullish, to give us confidence to get in for long positions. When I speak about stocks, would want to stretch that to group of stocks also, right? And that is the flip side, all right? And I guess from that we'll wait and see. However, let's go to the charts to see the interpretation of the current high impact data as it is. Beginning from German 40, bounced off from the area of interest that we are speaking about yesterday, giving us a beautiful pin bar. And this is normally an indication of price print to the upside, and giving us confidence to consider for retracement to keep on getting long for this particular asset. That is if it had already left you, right? For gold, similar scenario, reacting from the area of interest that we alluded yesterday. Let me prolong this. attempting to retrace the uncertainties which are being brought by the tariffs will possibly keep having it being long. However, it is important to wait for the tariffs if they are going to be a little bit less aggressive, uh, contrary to what the market has been expecting, which has been giving us this bullish rally. We would consider getting for short-term short positions so that we don't contradict the long-term bullish trend, and until major lows are taken out for us to consider being bearish. But as it is right now, being bearish is considered a risk on approach or much more risky approach, and being bullish a risk off approach or less risky approach. However, it's important to wait for those tariffs for us to get a much more needed market direction. Off to stocks. We are still on the roller coaster, not going aggressively up, not going aggressively down. And after the tariff data comes out, we'll possibly see a market direction. Remember, this is US 100 or the Nasdaq, composed majorly of tech stocks. On S&P 500, also behaving in a similar manner. After the tariffs, we will possibly have a much more needed market direction. US 30 or the Dow Jones also behaving in a similar manner. If I would take a look at individual stocks in this context, looking at Tesla, we are attempting to be bullish, although not in a much more needed direction. This optimism on investors on Tesla is based on the alluded tariffs on automobiles. These are cars on by United States trading partners. Now, Tesla being a United States company producing cars within the territory of the United States is giving investors much more confidence to invest on Tesla, because the taxes being imposed on foreign cars is favoring local companies, right? After the tariffs, we'll have much more of a market direction. US oil reacting from the area of interest at $71.84 per barrel. Finally, this by any chance is not financial advice. This is purely meant for educational purposes. Kindly consider to do your due diligence and observe risk management. Until tomorrow, the same place, the same time, let's all hold braces, awaiting for the announcement of Trump's tariffs to have clear market direction. But for scalpers and day traders who could get trades in the day, for swing traders and position traders, we hold our current positions, managing them as they are, as we anticipate that high impact news.